So let's start this Brownbag. Okay. So good morning. So from Manila. So thank you very much for your participation in the virtual Brownbag from the Asia Development Bank. So my name is Shigehiro Shinozaki, a moderator of this Brownbag. Today, so we are pleased to present key findings from this recently published Asia SME Monitor, so 2020, Volume 3, which discusses the impact of fintech on Filipino tricycle drivers in their lives and in business. So our studies was based on this baseline survey we conducted in late 2019, focusing on tricycle drivers that took innovative fintech loans using IoT device developed by Japan's fintech company, Global Mobility Service. So this study is supposed to be developed further for impact evaluation this year. So to discuss our report, we have the privilege of having Mr. Brian Kim as lead author of the report. So he is an associate professor in the economics department at Hong Kong University of Science and Technology and an assistant professor at Cornell University of the United States. We also have the intervention from the Global Mobility Service, so our study partner, Mr. Kazumasa Nakashima. Mr. Nakashima is the Chief Executive Officer of the Global Mobility Service Philippines. So he will report the situation of Filipino tricycle drivers during the pandemic in the Philippines. And as a discussant, we have Mr. Melchor Plabasan from Bangko Sentral Pilipinas, BSP. He will make comments, feedback on our report and discuss how fintechs can accelerate the financial inclusion in the Philippines with BSP's initiatives. So after 3 presentations, we will have open floor discussion. Then my colleague, Mr. Yamano, will announce the next phase of our studies as a new project. Okay, so for questions, as this is a broadcast type webinar, please type your questions into the Q&A box, which you can find at the right side or at the bottom of your screen. Please give your questions concisely. And so we will pick up these popular questions. For Japanese participants, Japanese interpretation is available in this webinar. Please click the interpretation icon on your screen and select Japanese. So to hear only the Japanese interpretation, just please click mute original audio. And also, please check the chat box. There's some instruction in Japanese. Okay, so before moving to this presentation, let me give the floor to our chief economist, Yasu Sawada, for his introductory remarks. So Yasu, please.
Thank you very much, Shige. Good day, everyone. Welcome to the ERCD Brownbag, fintech loans to tricycle drivers in the Philippines. Micro, small, and medium-sized enterprises, in short, the MSMEs, play a very crucial role everywhere for business opportunities and also employment generation. For example, I will give you some number. In Southeast Asia, MSMEs accounted on average for 97% of all enterprises, and also 69% of total workforce, more than 40% of GDP in the last decade. Accordingly, MSME development has been a national policy priority in almost all countries in Asia and Pacific. However, in reality, limited access to formal financial services often inhibit MSMEs' business development. Then how can we eliminate these binding constraints? In order to provide a response, albeit partly, today's discussion based on the thematic chapter of the Asia Small and Medium-Sized Enterprises Monitor, ASM 2020, volume number 3, focuses on financial technology, fintech loans to self-employed tricycle drivers in the Philippines. This report examines how fintech can empower the poor and unleash potential of micro business by giving access to credit market. This amazing fintech program today we will discuss has been developed by Japan's fintech solution provider, Global Mobility Service, GMS. Our study is an outcome of successful collaboration between GMS, ADB, as well as the Tricycle Operators and Drivers Association, in short, TODAS, of the Philippines. I really thank Mr. Tokushi Nakashima, President and CEO of GMS, and also Mr. Kazumasa Nakashima, CEO of GMS Philippines, for this great opportunity. Today, we are very happy to have Mr. Kazumasa Nakashima, CEO of GMS Philippines, in our panel discussion. Also, I very much appreciate Mr. Melchor Plabasan from Bangko Sentral Pilipinas BSP and in joining as discussant. This study was led by Professor Brian Kim of Hong Kong University of Science and Technology and Cornell University, together with Shige and also Takashi and myself from ADB, who are all joining the webinar today. In addition, I wish to express my gratitude to Professor Sinju Choi of Seoul National University, who gonna joining this webinar also, and Mr. Shiho Park, now PhD student at the University of Illinois at Urbana-Champaign, for their strong joint work that led this report. Having said this, today's discussion is based on a very fresh, but the very first baseline study we conducted about a year ago. I'm looking forward to continuing our very close collaboration with GMS and the research team. Thank you. Thank you very much. Over to you, Shige. Thank you.
Thank you, Yasu, for the remarks. So now, let's move to this presentation. So Mel, can you upload our presentation? Okay. So firstly, I'd like to brief the study background, and then Bryant will discuss the details of our study. So next, please. Okay, so this study is on fintech loans commenced as part of Asia SME Monitor 2020 edition, financed by the Japan Fund for Poverty Reduction. We focused on Philippine self-employed tricycle drivers for the study. So the self-employed home businesses or informal businesses are an important segment of MSME development agenda. So that's why we target self-employed tricycle drivers. So in this study, the main objectives of the studies were to how financial technology can help tricycle drivers improve their living standard and social welfare, and also to explore possible financing models for the self-employed people or tricycle drivers. The studies was conducted in collaboration with Global Mobility Services, GMS, and tricycle operators and drivers associations we called TODA. The baseline survey was conducted by the Manila-based consulting firm, OIDCI, from November to December 2019. Next, please. Okay, so just to quickly touch upon ADB's Asia SME Monitor, which we call the ASM. The ASM is a knowledge-sharing product developed as a key resource on MSME development policies in developing Asia. The ASM comprises three key components. First one, thematic analysis. Second one, technical assessment, denoted by a newly developed composite index, SMEDI. And third one, country and regional review. So this is the main report of the SME monitor. And in the thematic analysis, upper circle, the ASM will discuss pilot project case studies related to MSMEs. So based on knowledge solutions, so identified by country best practices and selected impact evaluations. So this fintech loan study is part of this component. Okay, next please. All right, so this is just for your information. at ADB website, so you can download all 4 volumes and data of Asia SME Monitor 2020. Okay, now I hand over to Brian. So Brian, please.
Yes, next slide, please. Yeah, these are the contents. Next. So I briefly, I guess most of us know where about the fintech project, the GMS technology. So let me briefly explain it. Next slide, please. So GMS technology, GMS technology can monitor tricycles, GPS coordinates, their distance, time traveled, speed, and the battery, engine oils. These are all possible, but more importantly, they can remotely deactivate the tricycle once it is safely parked. So the drivers is not able to pay back. They basically, the GMS technology allows them to deactivate the tricycle and take it back. So that's the new development. Next, please. And this allows new opportunity for the lenders and the borrowers. For the lender side, the new technology significantly reduces the monitoring costs. Motor hazards might decrease. Also, in case of the failure to repay, tricycle can be safely deactivated and confiscated. So it basically allows lenders to prevent the failure of the repayment. Next, please. Again, this new opportunity for the borrowers too. It allows the drivers to get the loan for the tricycle without collateral. This is new. This is very critical. So the owner of the borrowers, the owner of the tricycle drivers, they should put the collateral, but most of them, like very many of them, do not have collaterals. So this technology allows the tricycle drivers to borrow the money to be an owner of the tricycle even without collateral. It also allows to progress their career much faster. Next, please. To implement a survey, we survey fintech, the fintech drivers, the drivers who finance the tricycle through this technology, and also conventional drivers who own the tricycles through the conventional loan program. But I also want to note that we will present some results, but this is not actually causal. It's an association. So it's a combination of two factors: causal impact and selection effect. So fintech technology may attract different type of people. At the same time, it also makes the drivers to change their behaviors. So two things: to select the different people and make the drivers change their behavior. It's a combination of these two. Next, please. So again, survey target is fintech drivers and the conventional drivers. Fintech drivers, we survey about 300 drivers. Conventional drivers, 2,200. Next, please. Here is our geographical distribution. The the non-fintech drivers, conventional drivers, they are mostly in the city of Manila. But the fintech drivers are widely across the counties. The reason is that like because of the survey budget, we surveyed the conventional drivers only in the city of Manila and the Quezon City. Next, please. These are the photos from the survey. Next. Survey contents, we surveyed demographic factors socioeconomic sectors, their attitudes, their behaviors, financial inclusion, repayment behaviors, their IQ, and their preferences, like really many things. Next. So first, we would like to compare fintech drivers and the conventional drivers in terms of demographics and household assets. So in the first column, we put the variables, like their age, their gender, whether they married, etc. The first column is total average. Second column is the conventional fintech drivers, and the third column is fintech drivers characteristics. The last column is important. We put the difference between the fintech drivers and the conventional drivers, and if you see the stars, these are the statistically significant differences between conventional and fintech driver. For example, fintech driver on average 40 years old, conventional drivers 43 years old. The difference is about 3 years and it's significant. Okay, all other tables are presented in the same way. So you can see some differences, many differences between the fintech drivers and conventional drivers. The fintech drivers are slightly younger and they more likely to marry, and their household assets usually have larger household members are large household members. Interestingly, they are less educated, about 1 year. So fintech drivers, compared to the conventional drivers, years of education is 1 year less. Next, please. Labor market activities. This is very interesting. So fintech drivers, we look at the working hours, working days, working break time. The difference is minimum. Although fintech drivers take less break, about 15 minutes per day. So total labor supply is similar, basically. It's not that different. But very interestingly, fintech drivers earn much more money than the conventional drivers. Like, look at this, the net salary per day. The fintech drivers makes about 730 pesos compared to the conventional drivers 550. Which means that fintech drivers' labor supply is similar, but they work more efficiently. Another interesting thing is that their spouse income also higher in fintech drivers. There are many stories could be behind it. For example, like because of the loan, maybe even spouse respond to work hard. That is one scenario. Another scenario is that the people whose spouse make more money, they're more likely to attract the fintech loan. So it's difficult to interpret this, but this is the finding we have. Next slide, please. Tricycle driver ownership, two types. They can borrow through the boundary system, or they can own through financial, through the loan. There are two types of loan, fintech loan and conventional loan. Now we like to compare those who borrow the money and purchase the Tricycle through two channels, fintech versus conventional loan. Next. Okay. Now we try to compare their source of money to purchase the Tricycle. The conventional loan people, they about 50%, 49% they from the own saving. However, the fintech loan, they're much more likely to loan, the financial sources are more likely to be from the dealers. Of course, it's because of by nature of the program. So fintech loan is offered through the dealers. That's why. Next, please. Repayment activity. Look at the conventional drivers. 81%, they pay back the money monthly basis. But the fintech drivers, by design, is weekly basis. but even some people pay daily basis, but it's basically weekly basis. Next, please. Repayment activities, total loan tenure, how long they have to pay back, how much they have to pay back. Fintech drivers, they have to pay back longer and more money, like maybe because they don't have to put the collateral. Of course, if you put the collateral, then your total amount of money and total period of your payback must be decreases. So this is not surprising. The fintech loan, because there is no collateral, so they have to pay back more money and longer. Next. Financial planning. This is very interesting part. So look at the first two items. Have a budget for your financial spending and financial goal. The fintech drivers, they're more likely to, like 5% more likely to have a budget plan, and 10%, 12% more likely to have a financial goal, right? So this is a very interesting finding. And next, please. And ownership of financial instruments. Let's focus the first two graphs. The first one is the bank account ownership, and the second one is debit card ownership. The first bar in each graph is conventional owner, and the next one is the fintech owners, fintech drivers. The fintech drivers, they are more likely to have bank account and more likely to have debit cards. I think it's a result of the fintech loan. As a consequence of fintech loan, they are more likely to have bank account and they're more likely to have a debit card. Next, please. The same types of table. So look at the first two, like bank account ownership, debit card ownership. That's what we have sent. I have presented. And the second panel, we asked they saved the money and how much they save. And the fintech drivers are more likely to save larger amounts of the money. Okay. Yeah. Next, please. We also measured the cognitive skills, numeracy, financial literacy, but because of the time, let me skip. Go to the 26. Next, 27, 28, 29. Yes, so these are the results. We find that Raven test, this IQ test, fintech drivers has lower IQ. Their mathematical ability, numeracy ability is lower, which is surprising. So although their IQ or their numeracy test score is lower, but as a result, my interpretation is that as a result of the fintech loan, given despite with disadvantage, they more likely to have the financial plan and they save more. It's maybe because of the causal, maybe due to causal effect, maybe due to selection effect, but the fintech drivers in general, they have disadvantage, but they have better outcomes in terms of saving the money and the financial planning. Yep, so let me conclude. Next slide. Yep, second bullet point, fintech drivers, much higher income than the conventional drivers with similar working hours. That means they work efficiently. And they improve, they have better money management in a sense that they have financial goals, better saving habits, even though they have lower cognitive abilities and lower education levels. The next bullet point, why the burden of loan payment to reduce the incentive to borrow for the non-Tricycle proposed, but fintech loan drives more people to open up the bank account too. So our team see some great potential of the fintech loan, and we hope to study more about the total benefits of this program with better study design. Thank you.
Okay, thank you, Brian, for the excellent presentation. Actually, so we also recognize that, so from this study, that this financial education is also critical, so for tricycle drivers to access more new and better financial tools. I think that this is one of the so results we will focus on this next phase of the study.
Yep.
Financial education matters. Okay,
Right.
so let me give this floor to Mr. Nakashima. Please, Mr. Nakashima.
Okay, thank you. Let me share the screen first. Okay, so good morning, everyone. My name is Kazumasa Nakashima from Global Mobility Service, and I'm also CEO of Global Mobility Service Philippines, Inc. For today, I would like to discuss about how GMS service and a fintech loan can help decreasing the default rate, and also be convinced to increase the loan portfolio to the financial institution, not only from the perspective of the Philippines, but in the world. Since GMS services can be a trigger to expand or maybe restart financing even during COVID. So today I would focus on specifically for tricycle drivers, but this can be applicable even for wheel and the taxi and the other commercial drivers, not also the private sectors. So I hope you could enjoy my presentation. And then I hope the people who listen to me can also join GMS services to make the financial inclusion together. So for begin, I would like to mention about the social problem in the Philippines today. In the tricycle sectors, there is 3.6 million tricycle drivers. And then as Mr. Brian mentioned a while ago, the system is what we call this a boundary system. The driver pay everyday rental fee and then the owner will get it. So what happened is that driver never owned the vehicle, there is no credit investigation, and then driver have to pay the rental fee forever. The problem here is that the driver doesn't have the a lot of credit information, and a lot of financing companies think that there is risk to finance drivers. So as a solution, what we call this a fintech loan, GMS has the system called this MCCS, Mobility Cloud Connecting System, and then Mobility Service Platform, MSPF. So MCCS can actually mitigate risk and then lower the default by activating and deactivating the vehicle. That's also mentioned by Mr. Brian. But I also would like to focus on the MSPF side, which can actually gather the data and then the collaborate the vehicle data and then collection data together and then generate credit data. So in my presentation, I would focus on more on the data side. So this is the data that GMS Philippines shows in operation today. So let's say there are 20% of the default or the delayed experience without our services. In our services, we have potential that 0.9% delayed or the default rate with the 9% of the MCCS device improvement, meaning activation, deactivation can help improving the 9% of the collection rate. And GMS also offer the operation services that can include the follow-up call, visit customer, pull out if it's necessary. So those activities can really lessen the risk and the default rate. So today's situation, around 5% of non-performing loan ratio is our achievement compared with the current BSP NPA ratio more than 12%. So as GMS, we are a fintech company from Japan. We are located in Tokyo. Philippines is subsidiary of the Global Mobility Service, Inc. Major stockholders are, maybe some of you knows that SoftBank, Denso, Sumitomo, Credit Saison, Aeon, Toppan, Kawasaki, Sojitsu, DNP, SBI, OKB, and other investors. Since GMS is following the principle through the provision of mobility service, we make people happy. Today, we are making at the society which can all earnest workers are correctly evaluated. We believe that MCCS and MSPF and our business model can achieve the goal to make a fair society. So as I mentioned, that situation in the Philippines is kind of difficult today, since unbanked rate is estimatedly 77%, poverty rate is 90%. This kind of a problem is not only the Philippines, but if you may see the ASEAN countries and then other countries in Africa has the same situation. So it means that financial inclusion is really needed in the world today, not only ASEAN countries. So our service is one of the trigger to start the activity. So GMS services is actually happened with the back support of the financial institution. So we provide the customers and then the services since we could remotely deactivate a vehicle if the payment is not made on time, and if it's made through fintech channels, it can immediately restart engine on real time in 5 seconds. And then not only that, MSPF can monitor the driving behaviors and then also create the new credit through the payment information. So today, as I said, that I would show you some of the data that GMS acquired so far. So this is the driver's mileage data comparison from the before COVID up to today. So as you may see, before COVID, which we say that it's 100%, and then from the ECQ or the lockdown period, it's only 10 to 20%. As of today, finally, slowly, the driving behavior and the mileage are increased. But at that time during ECQ, there are a lot of difficulties or a lot of things that data told us. In fact, because of those data, GMS Philippines made a lot of actions. So driving data actually tells stakeholders voice and tells us a lot of stakeholders voice. And then one of the things that we found out through the data and then as an output is that our staff called all the clients of the GMS Philippines and then found out at that time 96% of the customer cannot live without help. And then most of the driver couldn't use the vehicle. And then most of the driver has no income. So as expected, it really happened in the field. This is let GMS Philippines make action for the distribution of the rice or the food or any help that we can do. The reason why we could do this is because we could get trigger from the data and then could make action. And then specifically the area which has suffered from the lockdown and then the limitation from the government because of the some of the regulation. So the regulation that today causing in the tricycle industry is that less passenger and then less driving days. We call this a coding. And then even some of the trips are limited depending on the LGUs. So we believe that if the driving situation is improved, I guess the collection and then activities can be more promoted. So we also understand that the pandemic situation is quite difficult, but we also promote LGU and then government to lower the limitation so that tricycle drivers' life can be better. So through those activities, we could succeed to make their life better. So when we see the July, for the livelihood and then income begin to be recovered. And then when we talk to the drivers, they are now motivated to work. So through those data, we are seeing that probably some of the area might be able to restart the financing. So what we focused on now is that we checked based on the area, what happened with the driving mileage. So this is some of the things that nobody noticed today. When you try to see the macro data, or when you try to see the newspaper or see the field in the Philippines, you may see that not a lot of public transportation is still driving or driven, but actually for some areas went back as like new normal. For example, Bohol and Davao, Visayas and Mindanao area, some of the areas are actually going back to the normal. So we also wonder, how about collection rate? As you can see, as driving range is increased, collection rate is also increased. So some of the area that driving range are drastically improved are also improved collection rate. So some of the financing institution partnership with GMS already restarted financing activities before other financing institutions noticed that those areas are sweet spot. So fintech data, MSPF data can also find out which area and then what kind of customer can be safe and then be financed for that. So the statistics that MSPF shows today is we found out mileage and then collection with MCCs has a lot of correlationship. So this data shows that when you see before COVID, right upper field, most of the driver pay and drive. But because of lockdown, if you see the red square, there are less driver drive and then pays. Actually, they couldn't pay during that time. And then if you see the GCQ timing and also the mid-March, that's the mixture of the normal and then lockdown, it's middle. So this trend can be seen in Metro Manila, other Luzon area, Visayas area, in very similar range. So we conclude that if you install MCCS and if those drivers are driven, we can see correlationship is 93.5%. So today, financial institutions have a lot of concern about providing loan post-COVID. Do you already imagine how long COVID problem or COVID season might last? Or did you already imagine that after COVID? So even today, there are a lot of people able to get loan before, but unable to get loan today. So we also think that those people are sweet spot, but there is no trigger to start loans. There are big opportunity to provide loans to those people through GMS services as well. So some of the example that we could show is that we aim at some spots, sweet spot from the MSPF data that we could provide loans. So from June to January 2021, we provided areas that we are confident to collect money. So today, those data shows that our collection rate is more than before COVID. And then compared with the other companies, current collection rate 60% to 70%. I would say that when you utilize the data through financing, there is a lot of opportunity that can beat COVID. So that's what we can believe today. Lastly, for your information, I would also like to mention how remote control system can contribute to lessen the default rate. So the left circle mention about 100 people. To be honest, there are around 30 people who did not pay on time. However, those people are followed up by our operation and then pay 10%. Around 20% of the customer are experience a deactivation today. Though those 20%, summary of 20% in the right circle, in short, only 4% of customer couldn't pay more than 2 weeks as of today. So after 2 weeks, we usually talk to the customer. Sometimes they pay, sometimes suddenly we need to repossess. However, we are also supporting to resold units. And then 16% of the customer who delayed, who delayed payment are eventually paid. Or the worst case scenario, MCCs can help repossessed and then resold again. So that's how our default rate is lower, or how fintech loan can help lessen the risk today. When the financing institution can gather up and then make financial inclusion together, not only in the Philippines but in the world. Today, when you focus on the Philippines, there is impact of $6 billion a year if 3.6 million tricycle drivers could get this is connecting with the 1.6% of the GDP in the Philippines. If there is a finance, there are a lot of stakeholders can make economic activities such as vehicle manufacturer and also the repair factories, and then even maintenance shop can earn. And then not to mention the income of the tricycle drivers are increasing. So this is the impact if GMS services is provided in the Philippines. And then we hope that we could have this activity together with the financing institution. So we are confident that since GMS services can mitigate risk and then promote payment of the drivers, so when they paid, there is additional credit, additional information that we can create, and then there is a successful story of the users. But not only for the users, but we are also confident again that benefit or the promotion of the loan can lead happiness to both clients and financial institutions. So GMS believe that through the provision of mobility service, we make people happy. And then today, as a CEO of Global Mobility Service Philippine Inc., I would like to promise that the GMS will achieve contribution to the international society. And then we also get trust from stakeholders, and we keep challenging to the future. So this is all my presentation. Thank you very much.
Thank you, Mr. Nakashima, so for the very important and timely information on the condition of tricycle drivers during the pandemic. Also, we saw the very fantastic figure that the GMS contribution to GDP in the Philippines is estimated to $6 billion per year. So that's very nice figures. So you are contributing. So now we move to Mr. Plabasan, so from BSP. Mr. Plabasan, floor is yours.
Yeah.
Mr. Plabasan.
Yeah, thank you so much. I hope you can hear me. I would like to share my screen. Hi, good morning, everyone, and I'm glad to participate here in this brown bag, and I hope you can see my slides. Wait. Yeah. And it's great to be one of the discussants here and to share our insights about this very worthwhile study on fintech loans to our tricycle drivers. And first and foremost, I would just like to copy this to this particular slide from the previous study, about the summary of findings. And I would like to commend the proponent of this study for focusing really on one of the financially excluded sectors in the Philippines, which is, of course, our tricycle drivers. And I think somehow these findings actually are consistent and validate our long-standing thrust to promote financial inclusion and digitalization in the financial services industry. I mean, when you say financial inclusion and digitalization, they are actually mutually reinforcing. I mean, they go hand in hand, enabling each other. And I'd like to discuss some of the findings here as I go along with my presentation. Of course, obviously, there was a significant shift to digital financial services, right? It's happening everywhere. It's very obvious in the Philippines. There was a significant growth, a tremendous growth, exponential growth in digital financial services. And consequently, there was a reduction in the use of ATM for withdrawals and checks for obvious reasons, really. It's really the physical distancing limitation. And this pandemic has become what we can say as the imperative for everyone to go digital, right? This pandemic has taught us that going digital right now is not just a matter of convenience, but indeed it's really a matter of a necessity or survival. And for us, that we see that we can really harness on the safe, secure, and vibrant digital economy and this can also help us particularly with our economic recovery, right? The objective in the near term, really, aside from having equal access to vaccine, is really to revive the economy, to jumpstart the economy. And we see the big role of as I mentioned, safe, secure, and vibrant digital economy. Now, again, we are commending the proponent of this one for focusing on the tricycle drivers, which essentially is part of the MSME sector. As you can see here, we cannot really talk about inclusive growth without addressing the development needs of the MSME sector. And as you can see here, 60% of the exporters belong to MSME. A big chunk of the business profiles or business landscape really belongs to the MSME sector. And in fact, in 2019, the MSME sector provided 5 million jobs in the Philippines. So we really see the need to, if we are going to devote our efforts on economic recovery, I think it's important to consider the role of MSME sector. Now, speaking of MSME, I would like to highlight that there are really some initiatives that the BSP is undertaking. Let's say we have the credit risk database. It's technology driven, so that will facilitate there's a technology driven credit scoring system. So that will facilitate access to finance. We have the demand side server to better understand the needs of the MSME sector. Shige mentioned about the importance of financial education and literacy. So it's not just for the MSME sector, but all our countrymen in general. And of course, I will touch upon the digital payments transformation roadmap of the BSP. So it will also ensure that we can expand access to innovative digital financial services among our countrymen. As I mentioned, we have embarked on a digital payments transformation roadmap for 2020 to 2023. The main goal really is to convert 50% of retail payments to digital, and to ensure that 70% of our adult population have access to transaction accounts. And how do we do this? So essentially, the roadmap is like this. So we're going to collaborate with the different sector to provide the digital payment streams, to improve the digital finance infrastructure, to have digital governance, to ensure trust in our digital payment system. We also need to, part of this, as I mentioned, is also the financial education literacy program. It also talks about the digital transformation of the BSP, because the BSP operates the RTGS in the Philippines. So that one has to be digitally transformed as well, and it's currently being transformed right now to a more robust and modern solution. And of course, a lot of enabling, in terms of the regulation, some of the policy reforms, and I would like to highlight some of these. So we recently issued circular on digital banking license. The open banking framework right now is being exposed to the different players, and the target implementation is actually by by first half of this year. We have amendments to e-money circulars, virtual currency or virtual asset. And of course, we also are updating our regulation on cloud computing. Again, all of these are really intended to ensure that we can introduce efficiencies in our financial system and at the same time expand access to innovative services so that we can reach more of our unbanked and underserved sectors of our society. And again, as highlighted by the particulars, this particular study, technological innovations or technology in general can be a survival kit, a survival tool, right? So, while this pandemic has brought a lot of disruption to our lives, we can say that you have all of these digital financial services which serve not only as a survival tool, but if we are able to channel them the correct way, the right way, that can also curtail financial inclusion barriers and essentially similar to the outcome of that study on fintech loans to tricycle drivers. It also has the potential to improve the lives of our countrymen. That's all, and thank you so much.
Okay, so thank you, Mr. Plabasan, so for your excellent intervention. So as you pointed out, so pandemic has forced businesses to shift to digital financial services and contactless society under the new normal. So the role of this DFS, digital financial services, has been increasing definitely. So even with the traditional business. So your BSP initiatives is very important. Also financial education you touched upon, you address. That's also the very important part of promoting financial inclusion by using the fintech. So, okay, so now the floor is open to audience. We have already received several questions from audience. I just so check it. Well, okay. Firstly, I'd like to pick up some questions for Mr. Nakashima, GMS, and so let's see. So because small characters here. Okay. That's okay. So once questions from the floor. So how did GMS do this credit risk assessment of tricycle drivers? And also related to this, so were any loans applicants rejected? So for this GMS tricycle drivers fintech loan programs, and also there was a legal issues pointed out from the floor. So is there any legal issues or no legal issues for deactivating the tricycles for these fintech loan programs or something like that? Okay, so firstly, I'd like to ask Mr. Nakashima to answer these questions. Risk assessments of the tricycle drivers for your fintech program, and also loan application rejection issues. Yeah, and also one more important is questions I received. Does reduced moral hazards lead to the lower interest cost for the driver? If yes, this would also lead to faster repayment of the loans. Maybe this one will be answered by all of the speakers. But anyway, so we'd like to invite Mr. Nakashima to answer these questions, risk assessment, and also legal issues for deactivating this motorcycle.
Okay. So first of all, thank you for many inquiries and questions. If I miss some of the question to be answered, please let me know. So I begin with the question of the risk assessment part. So today, before GMS send application to the financial institution, we do credit screening by ourselves. That is start from the basic screenings, including the character check and then the income information. However, the something it's interesting is that we actually also check the driving behavior of the customers. So from the data, we know what kind of driving behavior would lead the good collection rate. So there is a questionnaire that we would ask them to answer. And then if those customers are potentially matched with our group, we call this a group one, we would usually endorse this to the client. So not only for the usual credit investigation, we also use the data from MSPF. So that's what we do. However, I also would like to emphasize that even if let's say the tricycle drivers are at the risk, and then we release the unit, we are also confident to deposit the vehicle with the MCCS, and then we can replace new customers. So the concept of our company is that we can do the financial operation up to the loan paid, even if the customer change twice or three times. So that's how we do. And then for next, maybe I can answer about legal things. So for legal, there is no problem at all. Today, first of all, we get consensus from customers before we proceed loan. They already know the installation of the MCCS, though they don't know where it is. However, according to the Data Privacy Act recently, as long as we could agree with the customers that unit is installed, and then in the contract there is clearly stated that the deactivation may happen when the payment is not on time, there is no problem. We also confirm this to the LTO and then the OTR as hearing, so we would assume there is no problem. Plus, there is no what you call this concern today. So that's the question, and then okay, so
And
reject.
then, yeah. Okay, thank you. And also, okay, so two more. So to Mr. Nakashima.
Okay.
Well, any fintech loan application rejected? If so, how does the group compare with these who are successful? So this is the question. And one more related to this. How do you think the social media usage and exposure to mobile media messaging so would influence tricycle drivers' awareness of fintech loans and their potential access to it? Okay, so rejection matters and also the promotion of your product. So can you answer this?
Okay, sure. So for the rejection, there is really minimal rejection, though some of the customer are hit as the loan credit record, unpaid loan credit record. So financial institution usually access to the BAP or CMAP. So those customer who hit the default before, we could not help them yet as of today. However, most of the drivers did not experience a loan experience before. So usually the application would be passed a higher rate than the usual loan. So that's the answer for the rejection. And then for the approach of the social media, as of today, I was surprised. Even from the article of the ADB shows that there are more drivers started to have the smartphone. And then most of the drivers, especially Toda people, are belong in the community. So seems like they like also the community, started to form e-community, like for example in Facebook, sometimes in Instagram or Twitter. So we also approach using the SNS and then Facebook advertisement. And then actually inquiry is much bigger than the inquiry from the dealer or the other approach that we do from the field. So if you ask me, there is a lot of potential. I would not say that tricycle driver awareness is insufficient, but I think we can do more. I think our approach can be increased, not only SNS, but probably using the current media like newspaper and others. So yeah, that's what we are thinking and doing today.
Okay, thank you, Mr. Nakashima, so for answering these questions. And so I'd like to now pick up some of the questions for Brian. And we have these good comments from this floor saying that the result of this baseline indicates that those successfully applying for fintech loans are likely to be the higher ability applicants, and thus these ability measures will need to be included to understand the impact of the program. So further, how important was the role of financial education provided to the successful loan applicants in their taking a better financial decisions? So can you answer this question? So
yeah, I think Yasu already responded to this question.
Oh,
so
okay.
this is a baseline survey. So there is no way for us to disentangle selection effect and the causal effect. I think I mentioned it in the slides from the beginning. So there is, only for the one baseline survey, this is difficult. But the IQ and like level of education, this is the predetermined. IQ is difficult to change after they become adults, and level of education is no way to change because of the fintech. So what we see is that we see the people who get to the fintech program, they have some disadvantage. That's for sure. But we found that their financial behavior is better. That part we don't know. This is like we don't know 100%. This is as a result of the loan, or people who have who have a better financial behavior, they self-select into the GMS. But here we see it's a little bit difficult for the company, for the GMS, to disentangle, to carefully measure their financial behavior, even at the stage of the application. So of course, it's a combination of selection effect and the causal effect, but we believe that there's some positive impact on the financial behavior. That's I hope it's
okay.
fine. Yep.
So Brian, thank you. One more comment we received. Does reduced moral hazard lead to a lower interest cost for the driver? If yes, this would also lead to faster repayment, so shorter long periods of the loan. So can you respond to this question?
So I think that's something Nakashima-san should address, because this technology allows drivers, borrowers, to pay better. So the risk is lower. So maybe that's why GMS can provide the money without collateral. But there is some possibility it also decreases interest rate. But that's something Nakashima-san can consider.
Okay.
I can also support the answer the question. So for the interest rate, yes, this will be the discussion with the financial institution, but I believe that the lower interest rate is possible because of the MCC's function and the increase of the collection ratio. However, for the shorter loan period is a little bit different issue, since for the income of the driver is daily basis. So when the loan period is drastically shorter, the amount of the monthly amortization is higher. Sometimes the amount is not affordable for the client. Though if the customer can make it short, I think that's beneficial for the end user. But we also have to think about the economic impact with the financial companies. So it can say that MCCs can give you the more option now to choose longer term and lower interest, or the higher interest and then shorter time, something like that. So I think that can help also both financing company and users. we can also discuss about it further if you're interested in.
Okay, thank you very much. And also we have received these basic questions about the methodologies of our study. What is the method of collecting from the drivers? Actually, so, maybe we need to explain the approach to collect the data from the survey. So Brian, so can you shortly explain this method for this data collection from the drivers?
Sorry, I missed your point. And which question are you referring to?
Yeah, it's the first one. So what is this method of collection from the drivers?
It's a survey.
Yes. Yeah, just to summarize this, so how we could get these more than 2,000 samples from the drivers.
Right. So we carefully designed this. We collect all the names of TODAs, and we randomly select the TODAs in order to make a representative sample of the conventional drivers in the Metro Manila, the city of Manila, and Quezon City. And then we randomly select 8 to 10 people in each TODAs. In the survey, we not only ask the questions, but also we introduce the behavior like survey module. So we actually pay for the money as a compensation of the survey participation, and we ask them to, we allow them to make an investment and make to measure their risk preference and the time preference. So I hope it's, I'm not 100% sure what the question exactly, but I hope it addressed the question.
Okay, thank you.
Nozaki-san, can I also add something? For the method of the collection, physically, our platform also connected with the almost all the payment channel in the Philippines. So some of the people can pay in 7-Eleven, by Center, SM, bank, and the pawn shops. So usually, and even the Gcash mobile apps. So usually for those drivers near 7-Eleven, they pay in 7-Eleven. If they connected with the internet, they will pay e-mobile wallet. So depending on the convenience of the driver, now they have more option as well. Maybe before they went to the dealer and pay. But today, we could also utilize the other fintech channels that available in the Philippines.
Okay, thank you very much, Mr. Nakashima. So that's great. And yeah, so collecting the data from the various type of these channels. So that is one of these benefits to use this fintech and also technology. Okay, so also we received some of these comments about the study. I just picked up. So are there plans to replicate this kind of project in other regions of the Philippines? I think we can elaborate, including the other regions from so besides Metro Manila and so Quezon City. So for this next phase of this study, yeah, this is also important to cover all regions as much as possible for the study, and yeah, so still so tentative, but so we try to cover other regions as much as possible for the next study. So maybe after the Q&A session, Mr. Yamano will touch upon this new phase of the study later. Okay, and then
Shinozaki-san, is it also okay for me to make a comment about this question? So for the replicate of the project, GMS today is providing these activities through the whole Philippine market. But if ever any viewer of this webinar is from Japan or Indonesia or Cambodia, we are also doing the similar business model depending on the countries. So if you're interested in, also we can talk about it for for the purpose of proceeding the project.
Okay, thank you so much. And also for GMS, so I received one more question. Does GMS have plans to expand services to other retail loans, so such as motorcycles or automobile, and so other types of the services? So beyond the so fintech loans, we examine this for this study. So is there any other services?
Yeah, actually, today we focus on the tricycles, but as I mentioned in the presentation, we already studied with the motorcycle and then four-wheel vehicle, truck. So our services can be applicable with any mobilities. So yes, we expand those to our services too.
Okay, and also some detailed questions for GMS programs of these fintech loans. So what is the equity requirement for the loan?
Yeah, actually, depending on the financing companies, but one of the strengths is that since our loan is strong, how can I say, there is a strong collateral power, so we can actually go with even without down payment. Some of the financing company also require down payment. So depending on the competition, I mean, if you want to emphasize your product stronger, we can also help to make the new product. So yeah, that's how it works. But yeah, we also have the product. There is no down payment today.
Okay, thank you. And then several questions to Mr. Nakashima.
Sure.
So do you also provide additional loan for repair of the unit in case something happens? So
Yeah.
or so if needed?
Well, yes. Strengths of our company is that we connected with finance and vehicle and technologies. So we also have the in-house repair staff that can help to also do the condition of the unit or recheck the units. So we could also do that. There is also program that second-hand vehicle repaired by us and then the loan. So we also have the product not only providing second-hand loan as it is, but the condition and then the loan to the end users. So the answer to the question is yes.
Okay, thank you. And so last one. So what is the percentage share of the Tricycle loan to this total loan portfolio of the GMS?
Does this mean that out of 100% portfolio, how many are the Tricycle loans? I guess. Am I correct?
I think it's amongst your total loans, loan product. So what is the percentage share of this Tricycle loan?
Mostly around 80% is Tricycle and then 20% is four-wheel. Other vehicles today.
Okay.
80%, 20%, something like that.
Okay, thank you. So now, yeah, I think I picked up all the questions right now. So any other questions from floors?
Did we answer the question? There is a rise in delivery segment. Can GMS target known to the community also? I guess
Also, if you don't, yes, please.
Also, are we getting questions from Japanese participants? Are we getting? Could you make sure that?
Check.
Or encourage them to maybe ask questions?
Yes. Okay. So for Japanese participants, so you can also type the Japanese in the Q&A box, and then I pick up the questions. So no need to write the English. So for this Q&A session. So please put your comments and questions in Japanese, and then so I will pick up. No questions?
Maybe we can proceed with some of the new questions coming.
Okay, so just a moment. Okay, so I got this one question to BSP, Mr. Plabasan. At what point, so will this BSP begin to support this kind of project? And also what kind of support can the project look forward to?
So I would just like to clarify that it's not potentially there are two government agencies that may have interest on this, not only BSP but also probably SEC, since they are the ones also in charge of supervising lending companies. But again, it's also, as I mentioned in the previous slide, there's the regulatory, I mean, there's the enabling regulatory environment. And if this is, I mean, I'm sure this is consistent with our digital payments transformation roadmap. I mean, the digital transformation in general and providing access to our underserved countrymen, then we will definitely support these initiatives.
Okay, so any other questions, comments, or feedback, suggestions from the floor? So Japanese language, it's okay. So you can write down these Japanese questions in the Q&A box. So no more questions? Okay, so if no more questions, so thank you very much for your active participation in the discussion. So, okay, so now the on time. So let's move to this next. So Mr. Yamano, will highlight this next phase of our study. So Mr. Yamano-san, so please.
Okay, thank you very much. Thank you for the great presentations, Brian and Nakajima-san, and great discussions. There are so many questions, and this shows that there's a strong interest among the participants in this area of fintech and new loan models. So today's presentation discussion shows the importance of collecting information, data, and summarizing data and analyzing data and presenting in study format. And this just stimulates discussion and put evidence to people who are new to fintech or skeptical of the fintech technology and have many questions. And today, I think this presentation answered some of the questions, but I think there are so many other questions remain. Especially there, I think there are some questions related to application of this business model in different loan applications, sectors, and so on. So I hope that today's discussion is very useful. And then from the beginning of this study, we plan for the 2 surveys. So the survey Brian presented is based on the baseline survey, and it clearly shows that those people who obtain fintech loans are different from those who obtain loans from conventional loans. So that shows the sort of a signal or evidence that this GMS loans provide loans to those people who don't have access to conventional loans, or at least a different group of the loans. And the COVID-19 pandemics, I think, posed a significant challenge to this business model. And I was wondering what was going on under the COVID-19 pandemic and then community quarantine. And Nakajima-san's presentation shows that, you know, what happened during the COVID-19 and then how people paid back the loans during this difficult time. So by conducting next survey, our plan is to conduct a survey, go back to the same drivers and ask about what happened since the last survey. So in the next survey, we can ask more detailed questions on how they came up with the money to repay for the GMS loans and other conventional loans, and what happened. from Nakajima-san's data, we understand some evidence situation of those people who are GMS drivers, right? But we don't have data information about conventional drivers. By conducting another round of survey, we can also collect information from conventional loan drivers, right? So other drivers, how they managed under this COVID-19 pandemic. So we are very excited about next round of the survey. Next round of survey, we will, as I said, go back to the same drivers, not going to other regions. And Shinozaki-san mentioned about, and then there's a questions of expanding the survey or study on other regions, but we plan to go back to the same drivers. We already have money secured, and so we are excited about. If you have any suggestions for our second round of the survey and study, please let us know. Okay, let me stop here, and thank you very much for involving me in this session. Thank you.
Thank you, Mr. Yamano.
Back to you.
Yeah, actually, I believe we had a fruitful discussion today. Lastly, we would like to have closing remarks from Chief Economist Yasu, please.
Thank you. Thank you very much, everyone and panelists. We had a very nice and lively discussion. When I hear about this GMS fintech device and loan program, looking back, I felt a similar excitement when I hear about the Grameen Bank in Bangladesh, and Grameen Bank and Professor Yunus won Nobel Peace Prize year 2006. And but basically, you know, with this fintech technology, fundamental issues of screening right borrowers and monitoring behavior and also enforcing repayment, these are wisely solved. And so because of this, more than 90% of a repayment rate achieved. So it's very similar to Grameen Bank and providing loan to the poor people without the collateral. But as Director Plabasan mentioned, this is a new element involved, digital. And this is a very great use of digital platform or digital technology. When digital, we often talk about the digital divide accelerated during COVID-19, but I can see this is a way to maximize the digital dividend and eliminating risk of digital divide. And also, I think complementarity, not only this fintech device, but as Mr. Nakajima highlighted, you know, complementary digital platform, you know, payment, digital payment is a key. So I think we can learn a lot out of this experience. And putting a broader context, transport infrastructure is really critical for sound COVID-19 recovery and also midterm development. And as Nakashima-san illustrated, this program or technology has really amazing potential to support the national economy, and also a scope for local currency capital market development. Once you know this money has been mobilized, how to make this money useful for inclusive growth. I think this is a really beautiful example. And according to Brian, today's results, we cannot necessarily disentangle selection effect and causal impact, but we see a lot of interesting observation. For example, fintech drivers work same time, but earning more income. That indicates they are taking more passengers and working harder, much harder. So I think fintech seems to you know, generated some interesting you know, incentivizing you know, workers' behavior as well. So, but anyway, looking forward to have a further collaboration, as Yamano-san mentioned, RCT of financial inclusion training. We are discussing, and also use of big data, as Nakashima-san shared with us, an enormous amount of useful big data collected through this fintech device. So we can examine impact of COVID-19 and also how to use a big data for better inclusion and better policy making. And also, as Nakashima-san said, other countries, if this type of program expanded, definitely we are interested in tracking and also uncovering elements behind very good, remarkable performance. Anyway, with that, I'd like to thank you. Thanks everyone, and Mr. Nakashima, Mr. Plabasan, Bryant, Shige, and Takashi, and all the participants participated today for lively discussion. Thank you very much.
Okay, thank you, Yasis, for this closing remarks. So now, we have to come to the end of our schedule. So we thank you all participants and the speakers for your active intervention, and would like to express our gratitude to the organizing team from GMS and ADB. So especially Haruka-san and Mel and Dixie. Thank you so much, and have a nice day ahead. So thank you very much and goodbye. Okay, thank you.
Thank you very much. Bye-bye.
Bye.
Thank you.